All right, everyone. Hey, thanks for joining us today. I'm Aubrey Stone. I'm the Chief Revenue Officer of Cybertools, and we are on our ongoing webinar series where we're talking about different aspects of cyber topics that are relevant today. And today we're going to be talking about cyber liability insurance. Not all insurance agents are created equally, which is exactly why we invite our very good friend today with us, Rusty Goodwin, because as cybercrime experts and cyber attack experts and cyber security experts, right? We know a lot about what can happen to businesses, but we don't write insurance, and we are not insurance experts. Yet that has become a big portion of the game today in protecting yourselves. You know, cyber liability is a safety net for small businesses, small and medium-sized businesses, that can ensure that a business can afford to run and return to normal after if an attack should occur. So today we have Rusty with us, who's going to share a little bit about it. I wanted to share a few details about some of the cybercrime we've encountered and how we've seen cyber liability insurance help these businesses. You know, insurance, your general liability policy, and Rusty, if I get this wrong, will you please correct me? Because like I said, I don't write insurance.
Sure.
I don't deal in it. But you know, it used to be that your general cyber liability or your general liability policy would have a little clause in it that protected you against cyber. But as we've seen cyber criminals ramp up their game and just an astronomical increase of how they're affecting people, we've started to see over the last few years, maybe even 5 years, where we're not seeing that included anymore. It's getting kicked out as its own policy, and really recommended for businesses to buy that separate policy. Is that correct?
It is, and there are still, you'll see in your business owners policies, your commercial general, a little bit of coverage for maybe some computer equipment and things considered business property, right? But you won't see any coverages anymore unless it's specifically endorsed. If you ask for it and pay extra for it, anything for ransomware, breach notification, privacy breach, data breach, any of that kind of stuff, they're going to write that under a totally separate line called cyber liability. So
yeah,
you're exactly right.
And these policies come with them a list of things that you need to say you're doing. And Phil and I are constantly meeting with our clients and talking to them about their IT infrastructure, their cybersecurity, how do they measure up? And we're facing looking at these insurance policies and talking to the businesses that we work with on whether or not the insurance policies cover and how they cover and what happens. And that's why we partner with Rusty. But we also are seeing things where they're asking us to do specific things. And a lot of business owners just, yes, they just check, write down that application and say that they're doing these things. And it's really important that we look a little bit closer at that application and make sure that what we're saying we're doing, we're actually doing, because that could, in the end, cause them not to have their claim covered. And so that's one reason why we've partnered with Rusty. I'll go back to the statement I made about not all insurance agents are equal, because I truly believe that in some cases of insurance that I've dealt with, it's almost like working with a used car salesman, right? I've watched my clients get sold things that they don't need and lines of insurance that aren't necessary. And so I really do believe that this line of business, you really have to have someone you can trust. And I can't rave more about someone I trust than Rusty. Just a good all-around guy, very informational, knows his stuff, and is a good heart. So we thank you so much, Rusty, for being our partner in this and coming on today to help us teach people about what they need to know.
Oh, my pleasure.
So I'll just go over a few of the scenarios that we've been involved with or seen happen, not necessarily with our own clients, but possibly people who came to us, or things that we've heard through the channel and working with other MSPs like ourselves. So some of the ways that cyber liability insurance can help you, right? So here's a story of a small retail business. They experienced a data breach where hackers were able to access their customer database, which included credit card information. And as we know, in most of our clients who process credit cards know, there is a body of compliance over that called PCI compliance if you're taking credit cards. So the cyber liability insurance got involved, and this is what they were able to do. They covered the cost associated with notifying the affected customers, providing credit monitoring services for those customers that had been affected, and handled all the legal fees that were related to any potential lawsuits that were going to come of this breach. It also helped cover the fines that they received by the body of PCI compliance. Another situation that we heard of is a law firm that was hit by ransomware. And this law firm was targeted by a ransomware attack that encrypted all of their case files and demanded payment for the decryption key. The firm's cyber liability insurance covered the cost of negotiating with the attackers, paid the ransom, and the cost that it took to restore the files of the firm. It also provided coverage for the business's interruption loss, and the amount of revenue they lost while they were down. So cyber liability can really help bridge that gap when you find yourself in a situation. There is going to be a period of discovery, right, where we have to see what happened, where we have to try to figure out how to recover it and do it in the best way. And that does sometimes cause your business to be down. So it's just a couple scenarios I wanted to throw out there, but I'm going to go ahead and turn this over to Rusty, and Rusty's going to kind of walk us through the ABCs of cyber liability insurance.
Well, I know that it's everybody's favorite topic. Insurance just thrills audiences worldwide. So I kind of deal with Aubrey and Phil that if I were to do this, I needed to be followed up in a few weeks by an IRS agent and a funeral home director, just to make me seem very interesting. So make sure that you tune in the next couple of weeks. So let me share my screen here, and we will. I'm assuming you guys can see my slides. So off we are into the wonderful world of cyber liability insurance. First of all, Aubrey, you did a great job talking about what it is, but it is a separate policy that can help your business be made whole, so to speak, or kind of recover when you get that catastrophic attack through a data breach or other issues like someone clicking on a link they shouldn't click on, or downloading a bad email, which we'll talk about. But it does have a combination of coverages in there that can really help you navigate and mitigate a loss through data breach. So what are some of the things that are covered? And Aubrey, you talked about a few of them, but we've got breach notification, which can get very expensive, ID recovery. And what that means, everybody, is sometimes if your customer's data gets breached, you not only have to tell them about it, but you might have to buy them LifeLock for a year, or ID Sanctuary, or whatever these companies are out there. It helps you remediate the problem. It helps you recover from data breaches, get that data back. It helps you pay ransomware. We'll talk about that one too, because that's an important one to have good coverage on, because most of those hostage takers, so to speak, they want to be paid in cryptocurrency. So how your carrier handles that is going to be important to you. Covers your hardware. And Aubrey, you're exactly right. Business interruption, for the time that you're shut down and can't produce or can't make money, it can help you recover from that loss. Extra business expense. Well, that's like, let's say that you have to rent some computers to use, while you're recovering your hard drives, or rent cloud space while you're recovering that you wouldn't normally spend money on. Well, that's extra income, extra expense that could be covered. It also will help defend you in a court of law. And Aubrey, I think in our conversations, one of the things we wanted to cover was, what's the difference between first party coverage and third party coverage? And everybody, I'm going through this quickly, but we'll have time for questions at the end. You can pop them in the question queue or ask them at the end. I'm going to fly through this, number one, so it doesn't seem too stale. because it is insurance. Number two, I want to get through it all. But first party coverage, the easy way to think about it is paying for anything that happens to you, the person who pays for the policy. So it can pay for your lawyers. It can get your data back. It can help you notify those customers. It can give you that lost income for business interruption, helps you with PR issues and crisis management. Again, that ransomware, that cyber extortion. Aubrey, like you said, there's a period of discovery, right? Well, that forensic exam needs to be paid for somehow, and insurance can help with that. And then if the worst happens and you do get blamed and get found in fault, help pay your fees and fines and penalties related to that incident. So first party, basically, if you're looking at, hey, anything that happens to me, anything that happens to my business. And third party is the other kind, and that's something, anything that happens to anybody else who's not you, your customers, a vendor, so payments to your customers who got affected by that breach. If you're an insurance company or the court, you have a claim that has to be paid or a settlement expense relating to that court case. This doesn't happen very often, but if you're helping people with their website and they steal someone's intellectual property or copyright, it can help you pay for that. Cost for litigation. Notice how many times we talk about lawyers in here, and that's a very expensive proposition. And guys, even if you're right, you're going to spend a lot of money to prove that you are right. So having that defense costs help accommodated is incredible. And then other settlements. So first party is anything that happens to you. Third party is anything that happens to anybody else. And then another question that we wanted to talk about is just what are some things people think about insurance that aren't necessarily true or maybe distorted a little bit? And this is my favorite part because this helps me not seem like, thank you, Aubrey, the used car salesman. So thanks for comparing me to that. I'm just teasing. So here's
it was
some
a
of the
pretty
most
bad comparison, I do admit.
It was, you know what though, the industry sometimes deserves it. So I'll take my licks. That's fine. We'll take our lumps. But let's talk about some of the misconceptions that we have here. One is, and Aubrey, you just nailed it, right? Some of us are making the mistake as business owners that all the promises that we're making are being kept. And we need to be careful about what those promises are. And then when we make them, we really need to understand what they are. So many times a CEO or CFO in a company will just fill out that insurance application and just say yes to everything. And they're assuming that the folks at Cybertools, or they're assuming that their internal IT department is automatically doing that. Well, it's on the app, they must be doing it. But you got to be careful. And you might say, well, what are some of those promises? Here's just a few. And Aubrey, believe me, this is only a few of all the things that they ask about, but it would take me the rest of the time just to go over all those. But they want to know if you're using multi-factor authentication and phishing training and endpoint protection, not just asking you how often you back up, but proving that you do and that you've tested it and that it works, that you do cybersecurity awareness training, that you practice good password management. And if you look over to the left of the screen, they're not just asking these questions on the insurance applications, and we'll talk about that application here in a minute. So get your seatbelt because it might bump some of you up a little bit. But federal law and federal regulations are asking some of these questions. State regulators are, but also some of your vendors and customers. You may have. I was on a call right before this where an MSP is getting a big contract, but he has to have a certain amount of insurance, or he cannot get the contract. And in that contract, he has to make several other promises. So a lot of our business now depends on the promises that we're making. So it's important that they are kept, but it's also important that we understand what they are. And a good managed service provider and a good insurance broker can help you understand the weight and the importance of all those promises. So check, for the love of God, check with somebody before you say yes and make sure you're really doing it. Another myth that we have is that insurance eliminates our risk. And Aubrey, I love how you put it, because I have talked to some very sophisticated CFOs and CEOs, and they'll say something like this to me: I don't have to worry about getting a hack. I have cyber liability insurance.
Correct.
Well,
We've
that's
heard
like
the
saying
same thing.
I don't have to worry about getting in a car wreck because I have car insurance. Well, you have not reduced your chances of a car wreck at all. You just ensured that you're transferring that risk when the wreck happens to an insurance company. So if you have that mindset, let me encourage you to really take a pause here and really understand what you're paying for. You are not paying to eliminate risk or even to reduce it. You're paying to transfer that risk so that the cost of that catastrophe doesn't come out of your pocket. And um, and the other thing that we don't realize is all the, I call it the mice type, right? We're not reading the fine print or the exclusions in those contracts related to the risk that we're transferring. And I'll go over some of those mice types later on in this presentation. So it really doesn't eliminate our risk, but what it does do. Oh yeah, this is a big one. And when you have a cyber liability policy, or especially when you don't have one, you have to have a really good understanding of how that can impact other insurance policies that you're paying for, like a directors and officers, or like an errors and omissions, or if you're medical, like a malpractice, like an errors and omissions or professional liability, any of what we call those executive risk policies. They can cause you to have to file claims on other policies. So it's really important to get with your broker and understand how all those policies work together, and also to understand what's being paid for in those policies, because this might sound funny coming from an insurance guy, but it's very important to spend as little money as possible on insurance. You want to spend as little as possible, because there's a ton of other things where that money needs to go that will prevent the bad guys from getting you, instead of just transferring the risk to somebody else when the bad guys get you. So you want to make sure you're not double paying for things in those executive risk policies.
And there's one example right there of why I say not all insurance agents are created equally.
I am kind of a nerd that way, so that's fine. But things are getting a little bit better. If you look at these stats in 2020, for every dollar that the insurance carriers took in for cyber liability premium, they spent almost 95 and a half cents in claims and admin. So if I told all of you guys in this call, hey, let's start a business together, but you're only going to get to keep 4.5 cents of every dollar, you'd say, no, I don't want to be in a business like that. So the carriers really had to do something, which is why you saw the applications get a little bit more difficult and more stringent. You saw the price go up. You even saw them saying there's certain industries we're not going to write, right? There's certain clients we don't want. So in last year, it was 48%. So it's getting better, because at the end of the day, the insurance companies, and I'm not ashamed to say it, they want to make some money just like you do. And they can't do that if they're spending 96 cents of every dollar they bring in. Some insurance carriers stopped offering cyber liability altogether. And that, I should have adjusted that one 3 or 4 years ago. We were seeing premiums increase about 100%. It's about 25% now that you're seeing that go up, or they're reducing the amount of coverage you can get. And I want you to look at that one, because we're going to talk about this later. Carriers are adjusting terms and conditions. Another way to say that is they're making new demands on our human behaviors. And we'll talk about what that looks like here in a minute. But that's the most, if you get anything off the slide, remember that last one, because that's the one that has the most to do with you. So another myth that we come across, tell me if you've never heard this, Aubrey. Oh, I'm not worried. We're not going to get hacked. It'll never, we're too small to matter. Or if it hasn't happened by now, it never will. And I had one guy goes, nobody cares about my data. I'm too small. And I'm like, yeah, there is one person in the universe who cares about your data. You do. I said, do you think when a kidnapper takes your kid, he's taking the kid because he wants your kid? No, he knows you want your kid, and he knows you'll pay a lot of money to get that kid back. So your data does matter to you, and the bad guys know it, and they know that you'll spend a lot of money to get it back. And I did an event with Eric O'Neill from the FBI a couple years ago. He's the guy that caught Robert Hansen, the big spy about 10, 15 years ago. And he says this: it's not a matter of anymore of people who've been hacked and people who haven't. It's people who've been hacked and people who don't know it yet.
Who don't know it, yeah.
They just don't know it, so it can happen.
And what is it? I think the last statistics I heard, Rusty, was like less than 0.1% of the cyber criminals actually get caught.
Oh, and we can, on future seminars, we can dive into this deeper because it's super interesting. But it's a numbers game for them. And 10 years ago, the average ransomware demand was about $3 million. Today, it's $133,000. And you know why? They know not everybody has $3 million.
Right.
but they're in your system. They know how much money is in your QuickBooks account, and they're going to ask for just a little bit less than that so they can get paid.
Yeah.
And if you have 10 grand, they know that's yes, so they'll ask for 9,500.
Right.
So they're super sophisticated. So they don't care how small you are because it's a numbers game for them, and they'd rather make 100 $10,000 hits than fail on one $3 million hit. So we got to be careful. But yeah, that would make a great seminar all on its own, Aubrey. Maybe we can
Yeah, it
come up with
would.
some slides to do that. That's way more interesting than insurance. I can tell you that, and kind of scary too. Which today is better because it's not scary; it's just facts. Those kinds of things are scary.
Yeah.
So,
Yeah.
so if you don't think it's going to happen to you, just real quick, there's almost 250,000 new malware produced every day. 94% of all attacks occur via email. So we're all clicking on things in emails we shouldn't be. If you have a small business, 43% of those attacks are aimed at you. And 15% only practice good cyber hygiene. So that means 85% of the people on this call probably don't. Well, of course, if you're Aubrey's customer, I'm sure all of you are 100% compliant. But for the most part, 15% only 15 practice good hygiene. And look at this. So it can take up to 197 days to even know someone's breached you. And then after that, it can take another 30 days to detect it. I mean, if you can detect it in 30 days, you'll save $1 million. Here's one that I'm sure will not surprise you, Aubrey and Phil. 75% of CEOs use applications that are not approved by their MSP or by their IT. The higher up you go in an organization, typically the less compliant they want to be. I'm too busy. I'm the owner. You can't tell me what to do.
I don't have
I'm a
time to wait
doctor.
on this.
I can't click one more button. I don't have all minute. Just all these excuses. But that's the fact is that's how we get got by these bad actors is we don't pay attention. Another myth is we think that it's too disruptive or too expensive to comply or to buy insurance. We're too busy to take the extra steps. We're too busy to pay a premium. It's too unaffordable to pay a premium. Well, and it's not worth the money. So I just want to ask you if you think this is too disruptive. If you have more than 50,000 records, the average cost of your breach is $6.3 billion. Would that be a bankrupting event for some of you? And I'm not going to read every one of those, but this is probably the only slide in here that's scary. Maybe I shouldn't have put it in, but you need to know it. And remember that last slide where it says it takes 197 days to detect a breach. It takes another 69 to contain it. So your business is impacted for 6 months, 8 months, 9 months. Is that more disruptive than having to hit an extra button or paying an insurance premium? I don't think so. I don't think so.
Yeah.
And then 60% of you all who get a breach go out of business within 6 months. So this is why these behaviors, whether it's complying with a security stack or buying the right kind of coverages, are super important. Here's the biggest truth you need to know. All risks change over time. We may have made insurance decisions a year ago or security decisions a year ago that on that day we made them were incredibly good decisions. But the bad guys never stop changing their methods. So what we decided yesterday may not work for today. We've got to be willing to constantly evaluate what we've got in place, constantly take a look at the behaviors and the coverages and say, is this good enough for today? And then once we look at it, how do we manage that risk? I'm going to go through these 4 quick, right? Ideally, we could avoid all risk, but then you can never open up for business. You can never do anything. You have to bury your computers 12 feet underground in a concrete bunker. So you can't avoid all risk. You can avoid some, and that's a very short list. But as business owners, we've got to make a list of the risks that we can avoid. Then this is going to be quite a long list. What are the risks that we have to accept just by doing business? If you drive a car, you have to accept the risk that you might get in a wreck, that you might have a flat tire, that you might run out of gas, that somebody might rear end you at a stoplight. All these risks you have to accept. You can't avoid those risks by driving around. Same with opening our doors for business every day. We've got to be smart and make that list of risks that we have to accept. That's part of good risk management. If all you want to say is, I just want to buy a big giant insurance policy and not work at anything, just shut your doors right now because you can't afford to buy enough insurance and there's no carrier who's going to give you that much. So we got to pull our heads out of the sand and make that list of risks that we have to accept. Then once we have that list, then we work hard with people like Aubrey, people like Phil, people like me, and say, how do we reduce the chances that these risks are going to bite us in the butt? What are we going to do to make ourselves a hard target, right? Then once we've done everything we can possibly do to reduce those risks, then we spend as little money as possible on an insurance policy to transfer that remaining risk to to the checkbook of a big carrier so that if the worst happens, we're not stroking that check. Hartford is, or Tokyo Marine is, or Travelers is, or Erie is. Somebody, not us, is helping restore our companies when the worst happens. So that's really your 4 points for managing risk in a smart way. And since this is about insurance, we're going to dive into here now. How do we pick the best way to transfer that risk? Well, what do you look for in the policy? You want to make sure you have appropriate coverage amounts. So I talked with a guy earlier today. I said, what's your annual revenue? He said, I'm going to do $40,000 this year. I said, well, then you need to spend exactly $0 on insurance, because if somebody's going to sue you for $1 million, you take your $40,000 company, you shut it down, and you open up tomorrow under a different name and don't worry about it, right? But if you're a $500 million company, well, there's a golden goose that really needs to be protected. So you got to work with your broker and say, what's an appropriate coverage amount for cyber liability? Use those highly rated carriers. Pay attention to retention limits. That's a fancy word for deductible. So every policy will say, hey, we'll give you $1 million in coverage, but if you get a data breach, you have to pay the first $5,000. Or if it's a ransomware, you have to pay the first $10,000. Or if it's wire fraud, you have to pay the first $50,000. It's going to be different. Remember earlier I talked about mice type? That's where you have to read that contract language and say, what do I have to pay for everything that happens? And then also, everybody, related to that is, what are the sublimits? You might have a $2 million policy, but that doesn't mean they're going to pay $2 million for anything that happens. They might only be willing to pay $50,000 towards computer equipment. They might only be willing to pay $100,000 towards wire fraud, or $500,000 towards ransomware. So that big number on your declarations page doesn't always mean you have that much coverage for everything. You have to really have your broker explain that to you in ways that you can understand of what this event is actually going to cost you. So pay attention to that contract. Okay, remember how I told you some of this was going to be boring? Well, here we are. But it's important that you know these next 4 lines are kind of boring, but just hang in there with me because we're almost through. Here's what you really need to pay attention to in your contract. One is that application that you fill out. When you fill out that application, everything that you say yes to is now a promise you have made to that insurance carrier. Let's talk about homeowners insurance for a minute. When I moved into my house, I said, hey, if I put in a fire detection system and a burglar alarm system, will you give me a discount on my premium? They said, yes, we will. So I said, good, I'm going to put one in. What would happen to my claim if I never did that? They wouldn't pay it because I made a promise in that application that I was going to do that. So as we're just flippantly checking yes to everything, remember, if you're not doing that or not going to start doing that, that can come back to bite you when it comes to claim time. So that application is important. The insuring agreements are all the promises that the insurance company is making to you. So you want to know what those promises are so you can hold them to task when it comes time to file a claim. And you're not just blindly saying yes to whatever they offer you. The conditions part is all the promises you're making to the insurance company that you didn't already make on your application. And that's where you really want to read it, right? What are your human behaviors going to look like? How soon will you file a claim? Who will you notify first? All these obligations you're entering into. Because I hate it that they call it insurance policy. It should be called an insurance contract, because it's just a contract like everything else is, right? Also, please, please, please pay attention to the exclusions. That is a list of all the things that the carrier has told you right up front. No matter what, we are not going to pay for this. It's kind of important that you know what you're not going to get covered for in that section. There's a few other sections called definitions and all more mice type, but you need to get your broker to come sit down with you and explain what those are, because like any other contract your organization signs, you need to have your legal department or you and your broker look it over and make sure you're agreeing to what you say, what's in that contract. And then this is kind of a cool thing I'd like you all to look for in your contract. There are 2 terms. I only put one of them down because this is the one I want you to remember. Pay on behalf. So you'll have one of 2 phrases in your contract when it comes time to get paid on a claim that you have filed. One says reimburse, and the other is pay on behalf. So let's pretend you got a ransomware attack and they want $1 million in crypto. Well, many business owners I know don't even know how to spell cryptocurrency, let alone how to get any. So no offense, but it's just true. If your contract says reimburse, what that means is you have to pay it first, and then the insurance company will reimburse you. Don't know many companies that have $1 million of crypto laying around in their couch cushions where they can just go pay the bad guys and then send the receipt into the insurance company. I always try to get my clients to a policy where it says pay on behalf. That means the insurance company is going to just step right in between you and that event and pay the bills directly for you. Because even if you can go to a bank, if you're shut down, you don't want a few days of going to the bank and saying, hey, can I have $150,000? Can I have $1 million loan until my insurance company comes through? Every hour you're down is costing you money. So you really want to look for that pay on behalf of. And if you have a policy that doesn't, go ask your broker why and have them get you one that says that. That's a very important. And there are a few other things, but I didn't want the boring section to be too long. This gives you a good 50,000 foot view. So when we're looking at the cost of a premium, what drives the premiums? And I made them all start with the same letter so they're easy to remember, right? Revenue matters. How much money your company brings in will drive premium. I did a quote a few months ago. I did 2 quotes, the exact same policy, the exact same coverages, but one company did $2 million a year and one company did $500 million a year, 500 million. And the small company's premium was $2,500, and the big company's premium was $95,000 for the exact same coverage, right? So revenue drives it, risk drives it. What kind of industry are you in? Aubrey, hate to tell you, but your cyber liability is going to be way more expensive than somebody who has an auto repair shop or a car dealership or a hardware store or a lawyer's office, right? You're
Absolutely.
just because of what you do is going to be more, right? Then also your relationships matter. Who's your customer base? Who are your vendors? What do your contracts look like with them? How secure and steadfast are they in their cyber hygiene, right? So who you're doing business with matters. And then the size of your customer base, the reach that you have, the reach that a disaster can have. Are you dealing with 20 customers or 20 million? That's going to matter. And then this is just as important as all the promises that you make in your contract. How fast can you recover from an event? Because remember, Aubrey talked about this and I did. One of the coverages in there is business interruption. And an insurance carrier knows you're a much safer bet if you can recover in 8 hours than if it takes you 8 weeks. Because they're stuck writing the check to pay you while you're recovering. And if you say I can recover in 8 hours, you're going to get a better premium than the guy who says 8 days or 8 weeks or 8 months. So those are going to be your premium drivers when you're looking at, hey, what's a quote going to look like for me? And hey, look at that. We got to Q&A, and I'm going to actually stop sharing the screen so we can see the Q&A better. See if there's any questions in there, or if you have any. Aubrey, I know you're kind of monitoring that too. If you've got any for me, just look at that. I was hoping to be done by 4:30. 2 minutes.
You did it. So. Woohoo!
Who wants to listen to insurance stuff for more than 20 minutes? Come on, man.
You know what though? It's good information. It's so needed, and people. It's a difficult thing to understand, just as cybercrime is, right? And so it's really good to have somebody who can break it down for us, put it into the kind of ABC language for us, so that we can really wrap our heads around why we might need it and how we can get it and what are the things we need to be concerned with when we're looking for it. So
I had a client. For any of you who are Office fans of the show The Office, I literally had a client last month say, I was explaining something about his claim, and it was actually going well, but he didn't see that it was. And he said, explain it to me like I'm a 5-year-old, just like Michael Scott. I'm like, okay, here we go.
Yep.
So sometimes that's what we need.
I might have said that to you a time or two as we've been talking about things. Hey, I do have a question that came in here. Somebody's asked, they noticed that actually, this one is my question, but there is another question in the chat that I want to do after this one. The first question that I've had from other people is, as they're looking for cyber liability insurance and they go to their main broker, and let's say their general liability is through like a State Farm or a big name, they notice that same company can't give them the cyber liability, and that kind of confuses them.
Yeah, so that's not necessarily a bad thing, right? Different isn't always better or worse. Sometimes it's just different, right? So you're going to notice with your State Farms and All States and Progressive, we call those captive agents. So Aubrey, let's pretend that you work for State Farm. The only brand of insurance you're allowed to sell is State Farm. You're captive to State Farm, and you don't have any other options other than what a State Farm and Allstate would offer. And if you hadn't fallen asleep yet, one of the slides talked about how a lot of carriers are just moving out of that market altogether, or they don't offer much coverage. It's not your agent's fault. It's just they work for a place that doesn't have it or doesn't offer it. Some of the captive agents can offer very small amounts attached to your business owner's policy. It's an endorsement. But it's usually only for 25 or 50, maybe $100,000. So if you're experiencing growth every time, that's one of the super positives about finding a broker as opposed to an agent. An independent broker, like our brokerage, we have access to dozens and dozens and dozens of carriers. So we have a better shot at, and it's not that we're any better of an agent than your guy. We just have access to more. It's like shopping at a convenience store versus Costco, right? You just have more options. So, man, I wish we could sell insurance in bulk though for cheaper. Wouldn't that be great?
With those little number codes at the end that mean something, and the $5 rotisserie chickens that they lose money on just to get you to come in the store.
That's right. But a broker is going to give you a better shot at getting competitive quotes, and with very large carriers whose niche is that kind of insurance, right? Yeah. They're much better capitalized to handle that kind of risk. Because again, cyber liability is one of the most dangerous kind of policies for a carrier to write, because it's almost a guaranteed claim, right?
Well, and it's complex, and then they have to get involved in the investigation as well. So then they have to have a whole staff, right? And one of the last claims that we were involved in helping with, we watched how the insurance had their own investigators who came in and partnered with us, and so they have to have a whole staff behind them as well to be able to mitigate and investigate.
Yeah, and the general rule, and again, this I never slam any other insurance, because I know how hard it's hard to understand, no matter the size or the scope or how many carriers you have access to. But if your business has grown to the point where some of those captive agencies can't accommodate some of these special lines that you need, your business has probably grown beyond the need for them altogether, and you need to move everything you have to a broker. Because as you grow, and it's not that they're doing anything wrong, you just outgrow things sometimes, right? Mm-hmm. And to be a better steward of this golden goose that pays you every week, you need to find a brokerage that can grow with you. And it's not just an insurance, it's all kinds of vendors, right? A small restaurant might have a local farm supplying food for it, but now when it has 20 franchises, it needs a distributor. It just happens. It's part of growth. So it's not that there's anything wrong with the way you've been doing business, but remember, everything changes over time, and yesterday's decisions aren't always right for today. So just be willing to accept that as part of growth. Yep.
Phil, do you have any questions on insurance?
Yeah. Kind of piggybacking on the factors that change your premium, right? And talking about the time it takes to get restored. One thing sometimes, like we've seen, right, with insurance companies, they come in, they have auditors that come in, right, and they don't want anything changed, right? It's leave it as it is, so they can do their own investigation, they can look at everything that happened and see everything out how it is, right? So if I am the business and I'm trying to determine what is my recovery time, and maybe, yes, Cybertools can maybe get me up and running in 8 hours, but because I have to keep things the way they are, should I really put 8 hours, right? Should I consider something more like 3 days or 4 days, kind of considering that time that the investigators are going to pretty much put my business on a freeze. What are your thoughts there on that?
Number one, I would always be extremely honest on an application, right? Because you don't want to mislead or underestimate just to save money on premium only to get your claim denied if that winds up not being true. But secondly, and Aubrey and Phil, you can probably speak to this better than me, there are ways to have a duplicate setup virtually and in the cloud where you can leave all the hardware and software at the location exactly what it was when the bad guys did it, and they can operate, virtually. Yep. VDIs in the cloud. So and again, For a super small company, this might not be affordable, but you're not as big of a risk because you're a super small company, right? So again,
Right.
it's one of these growth decisions. Hey, I'm going to spend more money on recovery and hardening my target, making myself a harder target, so I can spend less on insurance, but also so I can be more assured that my claim gets paid.
Yeah.
So that's where you guys need to work with Aubrey and Phil and say, all right, what's more disruptive, the money I would have to spend to do this, or being down a couple days longer? And it's not the same answer for everybody. You might say,
No.
screw it, I'm not spending that money for a VDI. I'll just be down 3 days, right? Or
Right.
you might say, I lose $1 million an hour if I'm not open, so I want 8 hours, right? That's
Well,
where you have to do that mental math.
Rusty, you'd be surprised. That's part of our network assessment. When we go into a business, if have a new prospect that's asked us to inquire, we go in and we do a network assessment to diagnose where we stand at today, and then prescribe, like, what do we need to do. But there's a lot of questions we ask in that prescription, and one of them is, how long can you afford to be down before it begins to affect your bottom line, or how long are you willing to be down? And more, even small business owners are telling us a few hours. Right. That has been a big change in, I believe, that the attitude of the small, medium-sized business owner. They too now feel that they can't afford to be down.
Mm-hmm.
Yep. And from my side of the table as the one helping underwrite these things, I love to hear that somebody doesn't want to be down for a long time, because it means the proposition of keeping insurance on that entity is much more sustainable now, because the premiums aren't going to just be volatile and go through the roof. Because what the carriers love to see is a business owner that gets it and that is trying their best. And insurance underwriters, actuaries, even the government knows no one can say I'm impenetrable. They know that anybody can be hacked if someone's determined to get them, but how fast you can recover from that means a lot. And so I love seeing that attitude in business owners, like, yeah, we got to get back up and run. In fact, I think his last name is Moynihan. He's the CEO of Bank of America. I heard him say this several years ago. He was talking to a room of CFOs, and he said, hey, if we're totally honest with ourselves, the cybersecurity budget is the only line item that has the potential to be an unlimited number. He said, because if you get breached or get hacked, there's no amount of money you won't spend to get yourself back in business.
Right.
He says, so we got to stop nitpicking on all the cybersecurity and get ourselves, because at the end of the day too, I wish I could sell somebody $100 million cyber liability policy, but you can't get one. 2-3 million, that's about it. Right. So you've got to at some point say, even when I'm transferring this risk, there's only so much I'm going to be able to transfer, and the rest is on me. So the money's much, much better spent with guys like you or with their internal IT. Because here's the wonderful truth. The bad guys are inherently lazy. And after 2 or 3 tries on you, unless there's a specific person that they hate at your organization or some real damage they want to do, if they're just out there fishing, they'll go to someone who's easier. They don't want to keep trying. They want a quick hit, turn around, get their money, and go to the next one.
Well, and I like to equate it to, somebody who sits in the bushes and watches your house, right? If to rob your house in the old days, right? It's not as common as it used to be, but they watch. If you have a dog and floodlights and a security system and a gate with barbed wire, they're going to go somewhere else. And that's kind of the same approach with cybersecurity, is let's put enough layers in to where it makes it difficult. No one should tell you that they can 100% prevent you from being affected by cybercrime. They can't promise that to you. So if someone is promising you that, that's not really authentic or honest.
Run away if they're promising you that.
Mm-hmm. But the thing that they should be talking to you about is, how many walls does it make sense budget-wise to put up? What's the risk that we want to take, right?
Well, and what you're describing is the digital equivalent to me canceling my homeowner's insurance, canceling my car insurance, leaving my house with the door unlocked, driving with no seatbelt, driving 100 miles over the speed limit, and then being surprised when something happens. But yet that's exactly the frustration that I feel so often is I see business owners treating their business exactly like I just described. And they would never park at a mall and not lock their car.
Yeah.
But yet they leave their digital door. It's like paying a locksmith $1 million to build the most complicated combination lock for your bank vault door that it was ever known to mankind, so that it's impenetrable, and then you leave the bank and leave the door open so that the lock doesn't do any good.
Right,
So we've
right.
got to, so much for the certificate of lock. We don't care enough to even shut the door. So we've got to
That's
start paying
right.
attention to these things, because remember, it is true. 60% of businesses that get a major breach go out of business within 6 months.
Yeah, that's
And that's a
unfortunate, but
sad,
it is
sad
true.
fact. Yeah,
Yeah.
it is.
And Rusty, I have this one question that's in the chat that I circumvented with my own question earlier, and so I feel like I should really get back to it because I don't want to be rude. So the person says, "Hi, Rusty. Thanks for the information. If I'm a small business owner looking to get started with my first cyber liability policy, what would you recommend I do?"
I would, if you have a good broker, I would go talk to them first and see what they can do for you. Make sure that agent or broker really understands the ins and outs of what's required in a good cyber liability policy. Some of those things we talked about today. I'm hesitant to say this because I like these things to be educational, but Aubrey, if any of these folks are clients of yours and they just want me to review what they have, I won't try to steal them from whoever they're doing business with, but I mean, it's a value add for your customers. I'll be happy to look at what they have or look at what they need and give, for the folks who ask that question, there's a lot I would need to know about your business to make good recommendations. What's your annual revenue? What's your customer base like? How many employees do you have? How many endpoints? How much equipment do you have? They can always, and anybody here, Aubrey, through you, they can get my information and reach out to me directly. I'm a pretty easygoing guy. I have not been put on this earth to steal people from their current insurance agents. But if I can help any of your customers, at least digest what they're currently in or what they have and make recommendations. And, if I see them screaming towards the gates of hell, I may say, for the love of God,
Yeah.
stop what you're
Well,
doing.
you've done that
But
for
most
us
of the time I'll say,
before,
hey,
and we
you're
really
doing great.
appreciate it. And
Yeah,
we've reached out to you with questions when we run. I mean, like you said, these applications are changing, right? And their recommendations are changing. And
is
what
crazy.
we walked through with a client last year is different this year. And we don't write insurance, so we have to have someone to consult with and ask these questions too. So yeah, that's a very valuable offer. I hope anybody on this webinar, if you're just wondering or you're piqued in your interest or you would like to learn a little bit more, Rusty is an amazing resource, and we'd be happy to get you hooked up with him. I think that's all. I don't see any other questions, and it was fabulous to spend some time with you today, Rusty, and thank you so much.
I love you guys. It's always fun to be with you.
All right. Take care.
All right, everybody. Thanks for the time today.
All right.
Bye.
Bye.